What's up, people? Welcome back to Investor T Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So another very positive week in markets. Everyone's feeling good. I told you in my last video to pay attention to some key upcoming earnings, namely Visa and MasterCard, and Microsoft and Tesla. Now, Microsoft kicked off the week with a solid beat on expectations. Forward guidance wasn't the greatest, but not a disaster. Visa and MasterCard, on the other end, crushed their earnings on Thursday with really nothing to complain about. Now, Tesla also reported on Thursday. We'll get to that in just a moment. But what took the market over the top and kept the rally going was the GDP data. That came in better than expected, demonstrating that yes, the economy is slowing, but it is still pretty strong. And on Friday, we received further confirmation that the inflation data is looking more positive than the consensus was anticipating. Now, when you take all that into consideration, people's sentiment is starting to feel like things maybe aren't as terrible as we feared. This then brings us to Tesla, who posted a solid 33.34% gain for the week, and rightfully so, I might add, given the earning results. So in today's video, I'll go over some of the main takeaways from the earning call. I'll share a couple of interview clips to help paint that picture for you. We'll check on the overall sentiment around the stock from analysts and close with what I'm personally doing about it. As always, this isn't to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. All right, so let's start with a fun fact. Tesla kicked off 2023 by hitting a new low at $101.81. It's the lowest level in well over a year. To keep it short and sweet, the decline in stock price is primarily attributed to the concerns around Elon buying Twitter and the demand for Tesla seemingly slowing during Q4 of last year. The announcement of a price cut was taken as confirmation that Tesla was absolutely in trouble, right? That was obviously blown up out of proportion. Before we realized it, people were declaring that Tesla was doomed, the FUD took hold, traders took large short positions on the stock, and we crashed hard. And I mean super hard. Look at the oversold reading here in December with the RSI at 16.56. But here's the thing. You can only run a doom and gloom campaign while we are in a data vacuum, right? This is where understanding the company fundamentals and paying attention to the technicals can help you see through the FUD and identify opportunity. The trip down to $101 was undeniably a massive buying opportunity. The stock is up just over 75% since the January 6th low. Okay, just think about that. Hopefully you bought instead of selling, but anyways, let's talk about some of the key highlights from the earning call. Tesla delivered 1.31 million vehicles in 2022. That's record deliveries. This translates to Tesla's highest ever quarterly revenue, operating income, and net income in their entire history. That is massive. We're talking revenue growth of 51% year over year. That's $81.5 billion, and net income more than doubled year over year to the tune of $12.6 billion. They closed out 2022 with $22.2 billion in cash. I mean, those are some ridiculous numbers. Elon during the call made it a point to highlight that they have no debt and the cash in their war chest has Tesla well positioned to face any challenges that a potential recession could bring, right? So that is very positive. Cybertruck also is still on pace to start deliveries this year, though Elon did caution that volume production wouldn't happen until next year. That's another way to say that most of us who have ordered one aren't getting our trucks until next year, so just be prepared for that. Essentially, it's the same scenario as with the semi, right? So Pepsi and Frito-Lay's took delivery of a small number of the semis in December of last year, as promised by Tesla, right? But the full fleet won't be delivered to them until next year, or actually I should say this year, technically. I could run through all the stats from the earning call, but I think this clip here sums up quite well the performance that Tesla delivered. So take a listen.
And the most recent earnings, the positive kind of profits, even though they were lower on EVs, as well as the price cuts that they recently did, it puts so much more pressure on traditional automakers like GM and Ford to not just make EVs, but make them profitably, which they are far from doing at this point.
What do you think is sentiment around the stock after we've gotten through this quarter and the profit concerns that people had going into it?
Tesla, they're always concerned about Elon. They're concerned about the company. But overall, at the end of the day, they're an automaker that does software extremely well. And we've been seeing the investors react to that right now. I mean, shares are trading in the double digits. The traditional automakers would be killing for that kind of quick hit. But right now, Tesla still is pretty much in a league of its own when it comes to kind of investors as well as EVs in general. We keep talking about EVs coming, EVs coming, EVs coming. But at the end of the day, Tesla sells more EVs than anyone in the US. That's kind of coming down a little bit, but they are still the leader outright.
That is where we are when we talk about the Tesla performance. Now, the crazy part is that doesn't even take into account the energy side of the business. Battery storage, for example, grew at an eye-popping 152% year over year. Also worth noting that Elon and the team hinted at some pretty big announcements at the company Investor Day on March 1st. You want to remember that date. And namely, news on further battery cost reduction, news on the next-gen EV platform for their cars, and more details on the sub-30K Tesla car for the masses. Investors clearly love the results and the forward guidance of continued growth at a 50% compound annual growth rate. I mean, the stock is up substantially post-earnings, right? Concerns around profit margin and vehicle demand were all addressed with a more than positive outlook for the year. Interestingly enough, no one asked about their Bitcoin position, which is kind of funny to me. But for those of us who do care, Tesla still holds all of their Bitcoin and have not sold since last quarter. So that's very positive in my mind. But anyways, I'll link the full investor deck in the description section if you want to go and read that for yourself. There's a lot of good details and good information in there. This is all very positive, but where do we go from here? And how do analysts currently view the stock? Tesla currently has a consensus rating of a moderate buy, 20 buy ratings, 7 hold, and 3 sell ratings. The average price target is $191.37. The top end of the range sits at $300, and the low end of the range is at $85. Keep in mind that Tesla is approaching the overbought territory, and we have the Fed meeting next week. Despite the fact that there are a ton of solid catalysts ahead for Tesla, I do think that those two key elements will have the stock and the broader market, generally speaking, take a breather in the near term. I would say that the size of the rate hike, so 0.25 percentage point or 0.50 percentage point, isn't as important as Papa Powell signaling that we are indeed approaching and or are now pausing to assess the impact of the tightening. How far Tesla pulls back, if at all, will be dependent on the outcome of that discussion. Again, that's just my opinion. And in the event that the stock does more than pause and actually pulls back, I personally don't foresee a full retracement back to the $101 level at all. That, of course, brings us to what I'm doing. I said earlier that the trip down to 101 was a massive buying opportunity. I was not able to buy personally at the absolute bottom because I was way too focused on trying to get the stock under $100, right? I was a little too greedy and too optimistic here. So ultimately ended up missing the 101 buy point, which is sad and funny at the same time. But then again, I'm not mad about it. I've been in buy mode since November of last year. My lowest buy point was $110 and I picked up 10 shares at the time. And as it stands, I now have slightly exceeded my target share count. As a reminder, 100 shares was the target that I had set when I started this channel, and I'm now sitting at 110 shares, which I think is cool. That said, my average is still a bit higher than I would like, so I'll more than likely continue to use these pullbacks on the stock to buy the dip and lower my average even further. I think it's important for you to know that Tesla is my highest conviction stock. The high forecast of $300, in my opinion, does not even begin to represent where I believe the stock will be in 2030. Again, this is a very long-term play for me, okay? And truth be told, I do appreciate that Elon is such a polarizing figure. Why? Because if not for the controversy surrounding him from time to time, no one would sell the stock in a meaningful enough way for me to continue to accumulate more at a reasonable price. The last thing I will say is this. As you contemplate whether or not you should buy the stock now or wait, consider this. Tesla is sitting on $22.2 billion in cash and has already announced a share buyback to be enacted sometime this year. They had previously stated that they would spend somewhere between $5 to $10 billion to do that. The stock has mostly already recovered from the overblown concerns, and the macro backdrop aside, there is a significant amount of positive catalysts ahead for Tesla. March 1st is the key date that you want to keep your eyes on for some major positive bombs to be dropped. And remember, I can't stress this enough. Once the Fed pauses, company fundamentals and performance is what will matter the most. Tesla is very well positioned to see its stock price rewarded based on that outperformance I expect to see this year. The share buyback will only amplify that. And so for me, it's buy the dip season on the Tesla stock. But on that note, that is it for me today. If you found value in my content, click that like button and share with others who you think could also benefit from it. For my newcomers, subscribe. It's free. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.